Peter McGuire now joins us to talk more about that. Peter, hi, a pleasure to have you. What is your sense, first of all, on where the crude oil prices are right now and the Iran sanctions? How severe a problem do you see that?
Well, good morning, Manisha. I think first off, if you look at, let's discuss Iran, and that's a little bit of an unknown territory in the sense we've been down that pathway so many times over the last, 30 or 40 years. And at the present time, I'd have to say that if it does impact to the level of what the Trump administration are forecasting, then I think it's going to be economic hardship across all of Iran, leading into the next, 6 to 12 months and going back to what they experienced in the 13, 14, 15 era. Now, as far as price-wise, it seems to be very much range-bound. That 65 to 75 for WTI and Brent until you see something, hugely happen. Where you've mentioned earlier as far as that Libya situation and as far as, supply disruptions. If you have weather outages from hurricanes, and we're right in the centre of that season now, then you could see some further uplift there and, of course, geopolitical tensions. But it seems to be all, at the moment, fairly range-bound on the big picture.
All right. So you do, as we're holding around those 76 mark for the Brent prices, you do not see an occasion where the prices could go to 78 or beyond. Are you saying that 80 is out of picture for the rest of 2018?
Well, you're leading up. Let's first off look at that the large OPEC meeting, or the main one. The meetings between now and then, but the end of year meeting, 3rd of December in Vienna.
Right.
I think unless you see something dramatic happen as far as geopolitical or weather outages or something happen in the Middle East, I think it's going to be range-bound. You might see that 78 touched on. But think of also this, Manisha, that you've also seen a very strong uplift as far as US dollar over the last matter of months.
Yes.
And you've only got to look at the Indian rupee to take that into consideration. And the Dow sitting at all-time high. President Trump and S&P through record territory this morning. President Trump saying, well, he needs to sort out Mexico, then NAFTA, and look at the big picture as far as China. So I think unless you see something really, outside of Main Street, I think it's going to be range-bound. I've just been around the markets that long. I think that, I'm putting hand on heart here and saying, well, I can't see anything to really drive them higher. But then again, how many times do traders say that and something from left field comes in and just sweeps the market to a whipsawing, $10 move?
That is always a possibility. But since you mentioned an all-time low on the Indian rupee and the crude oil price is trading higher with Indian gas, diesel and petrol prices at all-time highs as well, how do you look at India with all of these factors working in?
Well, it's got to be a major impact as far as inflation. Modi government have got to be very mindful of that, and and what happens as far as consumption base. That many extra motorbikes, cars, trucks, and all forms of transportation hitting the roads across India each and every day. Huge population base. That's got to cause concern to the man in the street as far as their wallet spend, because the fuel prices are at those highs, and in turn, it greatly impacts other parts of your life. So that just seems to be the normal, occurrence. It happened I remember in Indonesia a few years ago. Happens in all economies, and India's having its go now. It's not an easy pathway, and that's where a damning effect could be that you see crude prices rally strongly from here. What impact it's going to have to the domestic Indian economy and through, certainly Bangladesh, the Pakistans, and leading into other parts of Asia as well, are sweeping. And it really adds an economic hardship. And again, it's a handbrake to the domestic economy.
Well, absolutely. But just before we let you go, one word on the metal space, because that, of course, has been lending some support. As Subhi was pointing out some time back, good gains there. How much of a US-China trade war concerns do you still see continuing to weigh here? Or are the markets really factoring or have factored most of that in?
Well, first off, you've got to see some form of negotiation and at the table breaking bread between China and US on those sanctions. And I don't know, or tariffs, I mean, and on that Main Street, the appreciation is that I'm not sure whether you're going to see it solved in the short to medium term. Both are digging their heels in. President Trump is one-way street, and he's just, I don't think he's going to let go of anything. So if that's the mantra and he stays strong to his word and he's that sort of guy, then I think it's going to have a great impact as far as those imports of Chinese goods. And I think that, China will play reciprocal. But, it's a 3-to-1 game. They export a hell of a lot more than they import. So, in turn, how that plays is going to be a crucial part to US dollar strength. What goes on with the Fed, and where does the US economy sit with all that, with local manufacturing and so on. And he's playing that hard game with Mexico at the moment.
Sure.
As far as motor car productions and so on. So it's going to be a fascinating 3 to 6 months ahead of us. And they're the inputs that can greatly impact a global economy. And that's why volatility, I think, is going to remain with metal prices over the short to medium term.
Okay.
Okay. All right. Thank you, Peter, very much for joining in.